All right, economic data may bolster some hopes of a soft landing, but our next guest is not buying it, saying he expects a recession and likens the current market environment to getting selected for jury duty. Joining us now to explain is Andy Kapyrin, partner at Corient, a wealth advisor with $147 billion under management. Andy, what do you mean by a jury duty market or environment that we're in right now?
Sure. So I came up with this story because this summer I received a jury duty summons. It's an important civic duty, but it can be a little bit frustrating because you get this little postcard in the mail saying, hold these 2 dates, don't go anywhere else. We might expect you to show up to court, but you don't know until the night before when you have to call a number to find out whether you actually come in. You actually come in, you don't know if it's a big trial or a small trial or whether the attorneys even want you on. So a lot of uncertainty, but you're on notice that something could happen. Investors got a recession summons. A lot of uncertainty, but they're on notice that something can happen. And I think the way you manage, but it might not. And I think the way that you manage through those two environments have a lot in common. You get a jury duty notice. You stay in town. You stay local. You don't plan an exotic trip because they might need you. So what does that mean for asset allocation? Stay local. Stay in the U.S. because when the U.S. catches a cold, much of the rest of the world loses an arm. So avoid international allocations unless they're in very durable and more safe exposures. When you go to court, dress comfortably. The seating is uncomfortable. The buildings are old and drafty. Bring layers. Dress comfortably. In a portfolio, the best way to dress comfortably, in my opinion, is an allocation to U.S. Treasury bonds, which are offering some of their highest yields in over 15 years.
An allocation meaning what percentage? Would that be a higher than normal allocation? If you were normally 10% in Treasury bonds, would you be up at 30%? Where?
I think a higher than normal one, potentially bump it up by 10% relative to where you've been. And I think in particular, a lot of investors have gotten used to doing what's worked for them. Past 15 years, what has worked for them? Owning stocks and avoiding bonds at very low interest rates. Interest rates have risen so quickly, I think a lot of investors are not fully aware of how much that dynamic has changed.
So a good foundation would be to have a more than normal slug of treasuries, and I assume you're talking about 1 year and less, or what?
I would actually consider adding some duration, adding some longer-term Treasury bonds, potentially as far out as 10 years, because what is beneficial about longer-term interest rates isn't of course, that they're higher today. They're actually a little bit lower because the bond market is upside down. The yield curve is inverted. But that is not a measure of value. It's not telling you be in short-term bonds because they yield more. What it's telling you is it's a prediction. It means that interest rates are more likely to fall than they are to rise.
All right, so dress comfortably, wear layers, which in this case means treasuries, and layer them into the portfolio. What about equities? What we have seen so far in 2023 is the resurgence of the mega caps, the NVIDIAs, the Microsofts, and so forth. Is that the safe haven now, or is something else the safe haven in case we do have what I think you're projecting as a relatively mild recession?
So what I think has happened this year is mega caps have rallied, in my opinion, on the back of two items. One is they're a more conservative play on average. They tend to maintain their value better in a recession. That was demonstrated in particular in 2020. But I think the other reason is a lot of the first initial hype, but subsequent follow through on AI. Now, what's the third thing you want to do when you get a jury duty summons is keep your plans open, because the night before you might call and they might let you off the hook. So, long story short, I got a jury duty summons. I called them the night before. They did in fact let me off the hook, and I had 2 beautiful days booked completely on my calendar. So what did I do? I took my kids to the beach.